The due date for Q1 estimated taxes is coming up. Hi, my name is Toni Cameron with TLDR Accounting. We are a strategic tax and accounting firm that helps small businesses and therapists in private practice. Q1 estimated tax payments. Dun dun dun. So due date 4/15/2020. Now, how do you come up with the correct amount to pay? Well, the first thing to remember is it is an estimated tax payment. So you're not going to come up with an exact number. Something rounded is completely fine. There are a variety of complicated ways to look at it, but the easiest is what income do you need to look at and what expenses do you need to look at? So step one, if you have a job that's a W-2 that has withholding, that should be taken care of through withholding. You want to look at things like business income, rental income, investment gains, the types of things that don't have taxes already taken out of them. So with a small business, you'd be looking at your business income, your business expenses, and your net income for the quarter. So say your net income is $500, you should reasonably pay in 25 to 30% of that $500 as your federal estimated tax payment. Now, that's just a rule of thumb. It isn't exact, but it's a good way to make sure you're being conservative with it and that you hopefully don't owe at year end. Now, if you want to be a little bit more exact, another way you could look at it is pull your prior year tax return, so 2019, and what were your total taxes for the year last year withholding. Now, that's what you're going to need to pay in for this year. Divide it by 4. There's your quarterly payment. Now, that doesn't work if it's your first year in business, which is why I did the 25 to 35% rule, because obviously you wouldn't have reported business income on your prior year return and you want to be covered just in case. So the 25% rule works pretty good. It keeps you on track because remember, this is just an estimate. Now, if your situation is more complicated than that and you have rental income, huge investments and things like that, and you're really, really nervous, pay in what you can, and then you can schedule an appointment with us and we can go over your tax situation and if you should be making a payment. Now, depending on how you did your prior year tax return, there should be some estimates already included with it. So it would list out payments you need to make for Q1, 2, 3, and 4. So I would look there first if you've already filed. Now, if you haven't filed and your return's going on extension, that's a little bit harder of a situation to deal with, and you just might want to pay something in to cover it. Now, if you're a small business, like I said, the 25 to 30% should cover it, and at that point, you should be good to go for Q1. Now, remember, it's due 4/15, so you got to make your payment. The best way to make a payment is online at irs.gov/directpay. And make sure that you save your confirmation and the confirmation number so you have proof that you paid. Now, you can send a check to the IRS if you want to. Not my recommendation. Could get lost in the mail. And if it gets lost in the mail, the IRS is going to say that you didn't pay them. So pay by 4/15, and then I'd recommend that you pay online. If you found this helpful, click below to subscribe.